Hi, I'm Scott from Solace Financial. Well, we've had a good year in investment markets so far this year. We had a little bit of a stumble in August where our share market was down about 6% in a week, and you can see it on this chart here. But we've had a good recovery since, and pretty much every day again, we're back up to record highs. We do expect volatility to continue, especially coming into October and into a US election this year. So again, we are taking a little bit more of a cautious approach while the market's up this high. But well done for all of the clients that stayed invested. I'm pretty sure pretty much everyone stayed invested over that little bit of a dip in August. We're also seeing bond yields reducing at the moment. Bond yields are usually one of a part of an indicator that we may see a recession in the future. We're seeing a little bit of a fall in bond yields. Practically what this means for you as an investor is you're seeing a little bit lower interest rates on your term deposits. We used to get about 5.1, 5.2% for a 12-month term deposit. Now it's more around the lines of 4.7, 4.8% in a term deposit. But you would have noticed the Reserve Bank hasn't changed its interest rates yet. Stay tuned. I wanted to talk about two things. I wanted to talk about China and I wanted to talk about happiness. The Chinese market over the last 5 years has seen a pretty big fall. It's down about 41% over 5 years. And sometimes as a financial advisor, it's about avoiding those markets, avoiding the big falls rather than trying to hit the ball out of the park with huge returns. Sometimes it's just about avoiding the landmines. But we did dip our toe back into the Chinese market earlier in the year, which I talked about in a previous video. And during the year, we saw some really good returns. It got up to 40% in the middle of the year. But so far, like up until now, we're up 18%. And we've seen a little bit of a fall since its highs in the middle of the year. On the happiness side, wealth doesn't always make you happy. But this chart here is one that shows the relationship between wealth and happiness with different countries and where they are. Along the bottom axis is how much wealth per adult that they measure per country. And on the vertical axis is how happy they are. So what you want to be is in the top right-hand corner. We can see here that China and India are quite large populations. They're in red as they're the Asian countries. In grey are the African countries, and generally they are less wealthy than other parts of the world. And in green, up in the top right-hand corner, you'll see Australia still. I still believe that we're the lucky country. We have really good wealth per person in our population, and our happiness level is really quite high. So while they're saying happiness doesn't, or being wealthy doesn't make you happy, it certainly doesn't hurt. That's it for this month. Next month, I hope to be in New York doing some research on some of the investment managers that we have in our portfolio, meeting some of those, what they do and how they operate. So I'll try and do a video market update in front of the bull, in front of the stock exchange. So stay tuned. Thank you very much for your time, and I'll see you next month.